This is the Daily Market Rundown live from the Tradelo trading floor. It's March the 27th. Some highlights from today's show. Tariffs raise stagflationary fears, Microsoft cancels some more AI capacity, and consumers are showing further signs of weakness. Good day, traders. Welcome to the Daily Market Rundown. Let's take a look at some of the overnight moves. It's very much been a follow-through onto yesterday's session. We saw Europe coming in and starting the day quite weak, of course, as Trump has now confirmed that he will be putting a tariff of 25% on EU cars. So we saw Europe start the day very, very weak. It's given back most of that, and of course we also saw the euro gap down slightly, and it's retraced that is now sitting on the high of the day. And I think that matters a lot because I think the price action that we've seen in Europe tells us a lot about what the market thinks with regards to Trump's tariffs. Now, with that in mind, let's actually go and have a look at some of the key overnight discussion topics. First of all, like I said, Trump has now sort of brought forward this idea that he is going to start charging these tariffs as of next week, Wednesday. He'll start collecting money, and effectively he has now put a tariff of 25% on all imported vehicles. Okay, the reality is that the key economies most hit by this, of course, are the likes of the Europe. They are one of the most sensitive to this. We also, of course, have then Japan and the likes of Mexico and Canada. So the point is that if we go and have a look at some of the key proxy markets, which we'll do in a moment, you would think that, for example, the DAX would be down quite significantly. And yet, if we take a look at the markets, DAX is down 0.62. You would think the euro, with its 27 nations, would be heavily impacted by this news. And yet the euro is up against the dollar 0.25. And I think that signaling matters immensely as we go into today's session, because what it's leaning on is this idea that these tariffs are actually going to prove to be a little bit more stagflationary for the US, because they are going to import inflation into the United States, and ultimately we're going to see a slowdown in demand and subsequently growth in the United States. So that's the way the market's interpreting this. It's interpreting it as a stagflationary play. We can see that in gold right back at those record highs as we speak. We can see it in the dollar down across the board today. And of course, like I said, if you go and look at the bond markets, we can see the curves are all steepening. Okay, so yeah, you can see if we look at the US Treasuries, the back end of the curve is sold off quite aggressively today, and we can see the gilts are also following suit. In other words, a lot of stagflationary type price action in the markets, and that is the key thing to take away from this. The markets are seeing these tariffs as stagflationary, and that's how you have to approach today's session. Now, with that in mind, of course, there is the euro chart. You can see overnight we did test that 200-day moving average. I suspect ultimately that euro now will stage a bit back up towards that 109.50. It is very much a buy-only market. It has, of course, shown us that rejection off of that tariff news, and that is significant. It tells you that everything you need to know, that it's both stagflationary as a play, but also dollar weakness as a play. So keep a close eye on that. I think euro is very much in play for a move all the way back up towards yesterday's highs, and then of course, like I said, over the next couple of days back up towards that 109.40 area. With that in mind, of course, we also take a look at Tesla. I think this is going to be a very interesting proxy for the markets in general today. Why? Well, you would think if you're putting a 25% tariff on all goods coming into the US, Tesla should be the number one benefactor from that. Why? Well, because effectively you're applying a subsidy or giving Tesla a 25% discount over all imported vehicles. So keep a very close eye on Tesla today. What we expect is that should have a very good day today. Now, of course, it does seem as though some of that news was already in the market over the last 4 sessions. We have seen quite an aggressive bounce over the last couple of sessions. So don't be surprised to see quite a lot of two-way trade. However, we're up 1% in the pre-market. I suspect that should hold. We should be in for a good session. If we're not, okay, that's going to tell you a lot about the sentiment towards the equities, and ultimately, are these stagflationary fears going to be problematic for equities? Okay, the base case is ultimately stagflation is never really going to be good for the equity markets, simply because the Fed won't be in a position to cut, and if anything, we will see, of course, higher yields, which at some point will filter into lower equity earnings as well as lower equity prices. So keep a close eye on that, because I think, and I suspect today we could be in for a little bit more weakness. Any kind of a bid up in the equities, I do suspect gets faded quite quickly. And like I said, Tesla's going to be a key proxy. It is the one that should outperform of the Mag 7. It should be the one that's green on the screen today. If it's not, it tells you a lot about that sentiment. So keep an eye on Tesla. Then some more news in terms of the US consumer, and I think this is a very interesting article. This has got to do with the airlines. Now, airlines are fantastic to watch as a proxy of consumption. Why? Well, because they're very much a forward-leaning indicator. They tell us a lot about consumers' ability to splash out effectively. Now, when times are good, everyone spends. Everyone takes those impromptu trips. People book those holidays well in advance, and they book multiple holidays as a result of being cash flush. The reality is that coming into this year, the airlines were looking very positive. We were, of course, talking about the golden era for the Trump economy. In reality, we've seen those expectations dashed very, very quickly. And if anything, the airlines have come out and have actually cut their first quarter profit forecast. Now, if we're going to have a look at the passenger airline index, and we'll look at that in a minute, it's effectively down 15% this year. Okay, now sure, that's coming off of a very aggressive rally post-Trump election. But in reality, companies like Delta are down 20% so far this year. Keep a very, very close eye on airlines. They are a fantastic proxy of consumer discretionary spending. If this consumer is tapped out in the US and ultimately they start to stop spending, that is very much the growth engine of the United States. Okay, they're very much a domestically driven economy. So if the consumer's tapped out and there's no more money, guess what? You are going to get a significant repricing in growth expectations. What that means for equities, of course, is we've got a lot more downside incoming. But like I said, we need to keep a close eye on that discretionary spending. So there is the chart. As you can see, we did have that very nice rally. Effectively, we're just back at those levels now. Okay, so it's not a case of the end. We have just retraced the entire Trump trade ultimately, but it's the speed at which it's retraced. Okay, we can see a very, very aggressive retracement, Jan, February, March. We're now having a little bit of a dead cat bounce, and it's going to be very interesting to see what happens at this point. Okay, I suspect if we do start to roll over, take out that yearly low, I do suspect that that is going to confirm that not only is the consumer tapped out, but ultimately we've now got a very low growth environment in the United States. And keep in mind, of course, the Fed is still battling with inflation, so it's not like they can step in and cut interest rates to support the economy. With that in mind, some more bad news for the Mag 7. Microsoft has come out, cancelled a couple more orders in terms of some of their leases. You can go ahead and read this Bloomberg article. This is a repeat of February, actually. Now, if you cast your mind back to February when this happened, it was only a week or so later after this came out that we started to see some significant sell-side weakness in not just the Mag 7, but the US stock market. Okay, so when this came out, I remember in February, I was kind of scratching my head going, what the hell? How the hell is the market not selling off on this? If they're cancelling lease, what they're telling you is that perhaps they've got too much supply. Perhaps they don't think there's going to be that demand coming as quick as expected. Okay, so keep a very close eye on this. I think Microsoft is going to get whacked. Not necessarily whacked today, but I think it is going to lead to negative sentiment for the Mag 7 in general. This is not good news. At face value, this is not good news. And sure, the article goes on to say that Meta and Alphabet are all picking up the pieces and saying, well, look, we'll take over those leases. And yes, you could probably read that as a positive. There's still all that demand. But the reality is Microsoft is cancelling it for a good reason. There is uncertainty, and that's the key takeaway from here. When there's uncertainty, investors don't hang around to guess. They simply exit the positions and wait for clarity. I think that's the key takeaway from the article. There's still a lot of uncertainty around ultimately what the heck is going on in terms of AI and ultimately the future demand for AI. Now, with that in mind, if we're going to have a look at the data center index effectively, we can see that it did actually break down lower yesterday. So it's almost one of those things that, the market was almost front running this news. We can see that it did sell off over the last two sessions. It's come in and tested that 200 moving average. Does it hold? Well, it seems to be holding a very, very often. So I wouldn't be surprised to see this bounce. And if it does bounce, fine. The reality, though, is if it does take out this 200-day, if we start to settle below this over the next couple of days and weeks, well, guess what? It does seem like the AI sort of profit taking or forced profit taking or stop out positions, whatever you want to call it, it looks like it's got some more run to the downside. Okay, so keep a close eye on that. I think it's something definitely to watch. It's not going to be good for sentiment, and like I said, there's a number of things that are making sentiment a bit creaky. We have, of course, bounced over the last sort of week and a half, 2 weeks. So keep a close eye on this. I think it's going to be a very, very interesting one to watch over the next couple of sessions. And then finally, like I said, there it is. Stagflationary fears rising. Dollar gets hit. And, of course, gold is back at record highs. This is a market that has now structurally got a horrible low. So again, it's not necessary that you want to be selling this. I know I've been on the sell side of this for quite some time, and it's just not a market that's paying on the short side. It seems like every time the price action starts to benefit and favor the shorts, we do just get that straight line bid in the opposite direction. However, that being said, this now starts to look a little bit like a flag. So we've got a very, very nice flag here. I think today is going to be very interesting to watch. I suspect we'll double top here. I don't think we'll break out today unless, of course, we get some significant risk off, which again, you don't seem to see that given the bonds are not flattening, they're steepening. So right now, I think those higher inflation expectations, as well as that little bit of stagflationary concern, is leading gold back up to these record highs. So watch the price action carefully up there. Okay, if we get a sell-off over the course of the day, in other words, if it retraces this entire move today, we'll get some sort of a V reversal. We'll put that double top in. If we close anywhere below the midpoint today in gold, anywhere below that 30-35 on the spot, I suspect tomorrow you are going to get a fantastic short back down towards that 3,000 level. So keep a close eye. I think gold's price action will be very interesting today. It's not a market I think you want to be selling today. You don't want to be preempting a double top. So just keep a close eye, because I think there will be some opportunity today/tomorrow. And of course, don't forget, we are rolling now into the front month. All right, with that in mind, of course, there's a number of things going on. Like I said, keep a close eye on a number of proxies. That's what the sort of the theme is right now. Like I said yesterday, looking at that VIX structure, it's very much a case of the market is in wait and see mode. Okay, we've got those tariffs incoming next week. Everyone kind of wants to just understand the real details behind it. So there is still quite a bit of hedging as we get into next week. And of course, we have got the non-farms as well next week. So once we get beyond those key risk events, I suspect the markets will then open up, start to trade a little bit more technically. Perhaps some of that hedging comes out of the market, and then it will, of course, open up the vol for us to trade a little bit more freely. With that in mind, if there are any other questions, do post them in the Discord channel. I can see some questions coming through, by the way, on the chat. So yes, I will analyze the NASDAQ for you tomorrow, and we can go over that and have a look at some of the key levels there. Otherwise, for the Tradelo members, do post your questions in the Discord. Otherwise, good luck out there today. Manage that risk. Go make some money.